Hello. Circle. Here we go, guys. All right, we're feeling good now. Hey guys, sorry about that. We're here. Yeah, we're here, guys. How are you? Let me know if you can hear me in the comments, guys. You're doing great. Good to see you.
It's hard to find good help, Seth.
It is difficult, guys. It's difficult. Paul, are you there? Great, guys. Can you hear us? Yes. I did not. Let's see if the comments are coming in. Hope you guys can hear us. Yes, great. David, thanks. Appreciate it, guys. Hey, how are you guys? Welcome in. We're in Mexico.
Velkomen, is that what you said?
Willkommen. Yes. Willkommen. Yeah, guys, how are you? I hope you're all doing great. Paul and I are here. Sorry about that little hiccup. Paul, you were just looking at some solar panels for this house.
I was speaking to some Mexicans about solar panels for this house, and I luckily, due to the fact that I can speak pretty decent Spanish, I caught them kind of lying to me. One was saying one thing in English, and the other woman in Spanish was not saying that. And I go, "That's not what she said."
Oh, you're kidding?
No, I swear to God, I'm like, "That's not what she just said."
That is what she said. So that's what she said.
so it doesn't matter.
Okay, guys, welcome in. Obviously, we had some turmoil in the U.S. yesterday, which it's funny, Paul. We were somewhat oblivious down here.
Yeah, I was like, we were like, you're walking, I'm like, man, and then all of a sudden,
what a beautiful day. It was just like
we were walking around the neighborhood.
We had no clue, and then somebody fired up Twitter, and next thing you know, it's just like all hell broke loose. So yeah, we certainly realize what's going on out there. It's not a wonderful day for the world, but
wait a second, they can't hear us still.
I'm sorry?
They're saying they can't hear us. Maybe they can. Don't mess with the multilinguals. Oh, yes, he can. Spicer said we can. Then who the heck? Dom says he can't. Okay.
Sorry, guys. Thanks, David. OG David, love you. Guys, we're talking about food today. Paul, I was thinking about the turmoil in America and really like
America.
Is it kind of a weird day to start going right back to talking about what we do? But
I'm fine with that.
Yeah, but in general, I think like this toot shall pass, or is it two? This toot this toot shall pass, and in the end, like we still have to make disciplined moves with our money, and that's what we're here for. So we're glad you guys are here. To all of our new subscribers, Paul, we wanted to hit 10,000 by tomorrow. I don't think it'll happen.
No, it's not going to happen. We only gained like 85 yesterday or 87.
But doesn't
matter. We're still gaining lots per day.
We're still gaining, and we're getting lots of you on Patreon, which we certainly appreciate. We love you out there. We got some Patreon requests to analyze some stocks today. So if this is your first time here, welcome. What we're going to do, you will learn in this video, in this live stream, as we take your questions, how to look at the financial health of a company, to really look at the company's PE ratio, its revenue, its net income, the number of shares a company has, its free cash flow growth, and how that relates to its market cap and its dividend. A lot of this might be news to you. Before I met Paul and learned about all this stuff, I only looked at a stock through its price. Will the price go up or down? That's the only way I make money. Paul's gonna, as we do every week, go through some stocks using a 8-pillar analysis and see how they shape up in Paul's opinion, of course.
Of course. I mean, that's what matters here in this whole thing is like, it's just my opinion, not necessarily correct. It's my whole thought process, guys, behind every investment I do is, if I bought 100 of the stocks like this, how would I do? That's how I look at everything. So that's my approach because that's my goal. My goal is to own 20, 30, 40 of the stocks that I believe fit my criteria, and overall they should do better than the market will do over time. Does that mean I'm gonna be right on all of them? No. Does that mean I'm gonna be right on the ones I miss? No. The ones I pass on? Of course not. But we've never seen anyone in history go follow the high-flying big stocks for fundamental reasons and do well over long periods of time. You can do that based on momentum trading and doing it that way and beat over time, but not based on fundamentals. I'm a fundamental investor on this channel. I look at everything from a standpoint of what are the fundamentals of this asset and what does that mean from the long-term perspective of price versus value. That's my goal. If you don't agree with it, I get that, but we're here to try to teach this like-minded approach of fundamentals that can ring true to some people and not to others, but we're adding Trader Mo. Hey, Trader Mo, can you do me a favor? Can you give the link to your Trader Mo YouTube channel so we can get everybody go subscribe to that so we can start building momentum on it, even though there's nothing on there? Provide that in the link. So guys, everybody go to that link that Trader Mo is gonna give and subscribe to it very quickly and then come back. Don't go change screens because we don't wanna lose you.
And we won't do that by going into our first stock today. Paul, what is this first company we're gonna look at?
And by the way, we have a big announcement coming.
Oh, snap.
How did you forget this?
I don't know.
We have a big announcement coming. We'll do it at 30 past the hour. 1:30, we'll do a big announcement, a very large announcement. All you patrons out there who know what it is, do not
Spoil
spill
this.
it.
Do not
I will
spill it.
kill you. I will literally bring you down to Mexico, and I will chop your head off if you spoil this.
That was a little rash, but okay.
And racist, if you ask me.
Okay. Great. Perfect, Paul. We're already off to a great start. Paul, let's look at that first company. Yes, stay tuned. In 24 minutes, an announcement that'll blow your mind. Paul, in comparison to other YouTubers, this announcement is
Phenomenally huge.
it's completely absurd compared to what other people are doing. And to our beautiful patrons, don't spoil it quite yet because we love you.
Okay.
We love you. We love you. All right.
Conagra?
Yeah, let's do it, guys. Paul's
This is up the
screen.
Patreon request line, right?
Yeah, let's get you in here, Paul. Let's see. Get your screen going. Did you screen share, baby?
Oh, sorry, my bags.
Try that.
Let's see here. Screen share screen, application window, Conagra.
Beautiful, guys.
Let's get that bitch up in
Let's see.
size.
Pew. Here we go. Conagra. What do they do, Paul?
Packaged food company that operates in the United States. Significant presence in the freezer aisle with brands such as Marie Callender's, Healthy Choice, Banquet, and Bird's Eye. Have you even heard of these? Oh, they also own over Rodenbacher, Slim Jim, Hunt's, Chef Boyardee.
What's the ticker, Paul?
The ticker is CAG.
Okay.
Okay, so they're a $17 billion company, 17 PE. So check mark there to start.
Pretty good on PE so far.
Profit margin, 12.3%.
Hey,
check
hey.
mark there as well. I'm actually surprised. I thought this was going to be like a 3 or 4% profit margin company.
That is interesting, Paul. Look at that. Okay.
And then a 3% dividend yield. So they're spending about $500 million a year on dividends. So we want to remember when we look at free cash flow, they need to have significantly more than $500 million a year in free cash flow to be able to support that dividend. But so far, 2 checks on Conagra, CAG, not CAD.
My apologies.
That's okay.
Let's look
Luckily
at
I caught that.
Let's look at the revenue growth
Over the last 5 years?
Over the last 5 years. This is pillar number 3, folks. Revenue growth.
8.7 billion to 11.05. Check mark there. Big jump in the last year. So we want to make sure that there aren't any acquisitions or dispositions happening. That's okay. Net income, a loss of 677 million
Wow.
to a gain of 840.
This is profit growth. They're doing great.
Check mark there.
Good stuff. All right, let's do shares outstanding. This is
Shares outstanding is
pillar
an
number
X.
5. We want this going down, folks.
It's actually been going up pretty consistently over the last 10 years. 434 million to 488. So X there. X marks the spot.
How about current assets over current liabilities, which is pillar number 6, Paul?
About 3 billion in current assets and current liabilities of 3.1. So X there. So also an X there for current assets, which is pretty common in the food business we have found.
So just to slow down just a smidge.
Yep.
Guys, we're looking at Conagra. Their PE ratio is good. Their profit margin is good. Their revenue and profit growth is good. However, they're selling more they're issuing more shares, and their assets are not better than their liabilities at the moment. We will look at free cash flow growth, Paul.
Okay, so free cash flow. Remember, what free cash flow is. Free cash flow is a cash from operations less your capital expenditures. That is the money they're going to use to pay dividends, buy back shares, put money towards other growth opportunities, put money towards acquisitions, etc. So one thing I like about them is you can tell their capital expenditures are not a big percentage of their cash from operations. So they had $1 billion in free cash flow 5 years ago and about $1.5 billion this last year. So there's a check mark there. So
Wow,
put a
check mark on free cash flow. Nice.
yep. So 1,000
Great.
plus 1,500,
Nice.
and then do 900,
900,
and then 700,
700,
and then 775
775,
for an average of
975.
call it $1 billion. Okay.
Let's
so,
slow down a minute here, Paul.
Yep.
So, folks, we found the average free cash flow for each year for the past 5 years, which is 975. We then take that number, we add a multiple. We multiply it by something to find what we think is the preferred market cap that we want to pay for this company. That doesn't mean it can be drastically different from its current real market cap on the ticker, but this is where Paul uses a little bit of his thought process in determining what the price of the company is versus its actual market cap. Go ahead,
So
Paul.
if you remember, there was a big jump in revenue in the last year. When I go to the cash flow statement, can you share my screen again?
Yeah, go ahead, bud.
In the cash flow statement, under cash flow from investing, you can look at net divestitures or acquisitions. If the number is negative, is positive, it means they sold more assets than they bought. But if you look right here, they bought a $5 billion asset 2 years ago. That explains the big jump in revenue. So revenue is not growing like crazy. I'm going to apply, but it's a very solid brand. I have a hard time believing that they're going to be gone anytime soon. So I'm going to multiply this by 15. So I roughly want to pay $14 to $15 billion for this company. Remember, you're going to ask me why 15? It's a subjective number. This is part of the art of investing. This isn't a fast-growing company, so I've got to get my returns from building up the free cash flow and building up and using and getting the dividends. So 15 times free cash flow is about the historical average for free cash flow. So I want to pay about 14 or 15 billion dollars for this company. And if you remember, the company's selling for about 17 billion. So it's not far off, but I still want it to fall for about 10%. So Mo, I think we need to look at this company and look at puts. Sub $30 is what we might think it's worth. So we want to look for puts much lower than that.
So Paul, you're saying target price, I mean, the current price is $34. You want it to fall to
30 or 31 is what I think it's worth. So you decide, are you buying it for what it's worth? Or are you a value investor like us? We want to buy it for a lot less than it's worth, et cetera. But I think this company's worth the low 30s somewhere. So if you buy it at 34, you're going to do horrible? I don't think so. But does that mean you should buy it at 34? I don't think so.
So just to recap, that was Conagra?
Conagra.
And Paul, they do have that 3% dividend. Were they able to pay that with free cash flow, I assume? Yes.
Yes, they were. They had more than double the amount of free cash flow the last 5 years to pay their dividends.
This is not an awful. It doesn't meet all of our 8 pillars, actually 6 out of 8. But
which is still pretty good.
Still pretty good. So interesting.
And I think in the food business, a very common theme, say on me here, a very common theme in the food business, guys, is it seems to have, I was saying keep it on me.
There's only one angle, baby.
On us, I meant, sorry. In the food business, there's a lot of, it's very frequent that total current assets are less than total current liabilities. I don't know why. If somebody's in the restaurant business can explain to me why, I would love to hear it, but in the food business, but it just tends to be that way.
I got a Red Bull right here. People are like, nice Red Bull. Paul, there's a question here by, where was it? Phoenix, one of our dear patrons. Can you explain your thoughts on when you'd use 12 as a multiple versus 15 versus 20?
Great question. The faster the growing company, I want to use a higher multiple. The slower the growing company, lower multiple. That is a very generic way of talking about it. It actually, if you just stick to that plan, it's probably going to work. But I was thinking the other day, how do I explain this any better? Yeah. There are other caveats to it, but faster growing company, higher multiple, lower growing company, lower multiple. Just think about it. Just think about it naturally. If a company's going to grow very, very fast, you're willing to pay more today for it than a company that's going to grow slow or not grow at all.
Keyarx asks, how do you get on the Patreon? In the description below, there's a link for our Patreon. You can join.
Or I'll just type it in right now.
Yep, or it's patreon.com/everythingmoney. Go ahead, Paul.
There's a big announcement coming to Patreon for Patreon users in 16 minutes. It's a huge announcement, but our Patreon's wonderful because if you love the 8 pillars and you want access to basically the financials and the 8 pillars, if you're a Patreon user, you get that access for free when the website comes out in a few months. And in about 3 months, we're going to have the website ready. So February, March, April 1st or so, we're going to have the website ready for you guys to use. And everybody who's a active Patreon user will get that website for free. And then when we make the 8 pillar app, they'll get that for free as well. So the Patreon is a great way to support us and get knowledge for yourself.
So Mitch said, just going back to Conagra, with so much free cash flow, why are they printing more shares?
That's a great question, Mitch. That's part of the do more due diligence process of this whole entire thing. Go learn about why are they issuing shares when they have enough free cash flow. I don't know why that might be. They made a big acquisition, so maybe that's part of it. Who knows?
Mason said joining the Patreon was the best decision he's ever made besides being born. That is correct, Mason. We appreciate your birth and join. Guys, you're doing great with the questions.
Mason, by the way, side note, Mason's mom and I have a date when I get back to Ohio.
Is that true?
No, it's not.
Oh, okay, great. Make sure, as always, guys.
I would love for Mason's mom to date my father, but I don't want Connor and Mason as stepbrothers ever. Because they would be freeloading. They'd probably spend more money than Mikey does.
Make sure you guys are tickling that thumbs up. As I've told you before, Paul loves to be tickled. And so just tickle that thumbs up and you'll get on his tickle train. Beautiful, guys. Other questions? We're doing great. Paul, should we look at our next company?
Let's look at it.
Oh, and Trader Mo just posted his page. Trader Mo will be talking all about day trading, the ins and outs of getting up, hitting the market quick, and he'll be going over that. He's sitting behind us for any questions. He's here. Okay, Paul, let's do the next company, which is Shake Shack.
Shake Shack. All right, guys. Shake Shack. We all know Shake Shack. I've never been to a Shake Shack. Have you?
I have a couple times. What's the ticker, Paul?
Shack. S-H-A-K.
Nice.
Not Q. K.
S-H-A-K. I have been to a Shake Shack reluctantly a couple times.
It's incredible.
Oh, really? It's incredible? Trader Mo?
Paul, I want to go there when we get back.
Okay,
I hear it's incredible.
It's in,
give us your thoughts.
Pinecrest.
Give us your thoughts out there.
Don't confuse it with Steak and Shake.
Oh, Steak and Shake. Oh my God.
You
Steak
did
and
do
Shake.
that, didn't you?
Absolutely. Where is the Shake Shack?
Pinecrest.
Okay.
Next to Beechwood. We'll go.
Okay, I gotcha. You're out of focus. Someone said, John. We're in focus on our end. So, anyway, guys. Yeah. Five Guys better than Shake Shack. And Christopher,
I do like Five Guys more than Shake Shack.
we just did Tattooed Chef this week, and it should be coming out. So make sure you subscribe and click the notifications. You'll get our Tattooed Chef video. But let's get on to Shake Shack, Paul. I'm sorry I digress. I know you
I
don't
knew the
like
second
that.
you heard Five Guys greater than Shake Shack, I knew that was Mason because he always. By the way, I love Five Guys. Five Guys to me is the best. By the way, where's Jensen?
Your chess coach, he'll be on. Don't worry. What is the market cap for Shake Shack, brother?
Oh, you're gonna make me go to this.
Yes.
3.7 billion. Now, like restaurants these days, they have lost money as of late. So there's no PE. So that's an X on PE. Profit margin, obviously an X because it's negative.
Wow.
So remember, these restaurants, guys, we're going to want to look at these through years where they were stable because this is kind of hard in this day and age with all the shutdowns and everything like that for these guys to make any money. No dividend yield. So let's go on to revenue growth over the last 5 years. So these annual numbers are through December of 2019, which is great. They went from $190 million in revenue to $595 million. Big growth there. Income, negative 8.8 million to 19.8 million. So check mark there, but their margin's only about 3 or 4%, which is not great. Shares outstanding, oh my Lord. This is one of the worst ones we've seen. 13.6 million to 31 million shares. 2.5 times more shares almost.
I don't believe that. We've never seen something that absurd.
That's a big number.
That was pillar number 5. Good God. Okay, God help us. Pillar number 6 is current assets greater than current liabilities.
Their
Paul.
current assets are 205 million. Their current liabilities are 104 million. Wow, check mark there. Check mark there for current assets over current liabilities. And now for the free cash flow.
Yeah, let's look at free cash flow growth. Did they have a dividend, Paul? I didn't check.
No dividend.
Go ahead.
9 million in free cash flow 5 years ago to negative 17 million. So X there. They haven't had free cash. This is just bad. They're overall zero free cash flow. Guys, Shake Shack's a tough one, and here's why. They're probably spending a lot of money on growth, right? So they're spending a lot of money on growth, and I look at it and think to myself, how do you value a company spending a lot of money on growth? This is a very big doozy. I don't know how to value this one. I don't even know if I'm going to put a value to it, only because like this one's an example of a company that I see and we just move on and say, you know what? I can find better restaurants that I understand better. Shake Shack's got a lot of, I mean, if you're willing to do the research on how they're going to grow, they're selling for 6.3 times sales. I don't know how that compares to the industry. Actually, let's look. Let's look how that compares to the industry. Actually, I'm not going to look it up right now because that's going to be too hard. But this is a tough one. I would just sit there and say, let's ignore that for right now. Let's just move on and find a different one. I'm not doing anything with Shake Shack right now. Move on from this one. Doesn't mean that I'm right or wrong. It just means that from my circle of my sphere of influence, it doesn't mesh with Shake Shack.
We're 10 minutes away from our announcement, so stay tuned. Paul, you're right. I get hung up a lot on the idea of, we've said this before on the show, is it's not, talk about the idea of just dismissing a company and finding ones that are much better. If talk about that. I get hung up. The same goes with real estate. Is I look at one house, Paul, and I want to buy it. I look at one stock that I'm interested in, I just want to buy. But it's really our job to weed out all the bad ones.
Yeah, I mean, there's 9,500 companies that are based, or 10,000 companies that are based in the U.S. That are over $100 million in market cap or something like that. Focus on those. You have to find 20 or 30 really good companies. Your job is to say no to a ton of them because that's literally, what, 1/3 of 1%? I mean, focus on finding 1 in every 300 companies that fit your criteria. That's what your focus should be. Don't even worry about anything else. Focus on that completely. You're going to do great with that. So this is good.
Keep up the likes going, guys. Kierk, you're in luck. We are doing Hershey's right now. This is off our Patreon request line. This came from Pathfinder. We love you. Thanks for giving us your time and your suggestion. Paul, I love Hershey.
Who doesn't love Hershey?
I don't know. It's hard. I mean, have you gone to the Hershey?
I've never.
It's fun.
Is it?
It's fun for kids too, but it's just a.
Ironically,
Go on.
Reese's was also started in Hershey, Pennsylvania as well.
They're the same company. If you go to Hershey Land, Reese's and Hershey.
But I mean, like when, back in the day when they were first founded,
they bought them out.
when they were first founded, they were
Oh,
founded
come on.
separately in the same city.
I love that.
And Hershey's not a big town, is it? Yeah.
Europeans hate Hershey's. See if that's true for our European folks out there. Let us know. Let's get after Hershey's ticker symbol.
They control 45%
HSA.
of domestic chocolate space. Wow.
Great chocolate, bro.
Kit Kat Kisses.
What do you love the best? I mean, for me, it's just like a Kisses. They've done the
Listen,
almond Kisses.
I love Kit Kats.
Kit Kats.
Have you had the new one, the peppermint one?
Oh yeah, the peppermint Kit Kat.
Oh,
or the
it's
pumpkin Kit Kat.
incredible. No, not pumpkin. We talking about pumpkin.
There's pumpkin Kit Kats, bro.
Peppermint.
There's both.
Oh.
I would say, like, if I'm feeling really bad and disgusted with myself, I will get a Hershey chocolate is my all-time favorite thing ever. Just a Hershey chocolate bars.
Hershey is good.
All right, here we go, guys. Hershey, what's the market cap on Hershey, baby? 30.
All right, it's a $31 billion company. PE off the dribble, high, 26. So X on PE. But their profit margin is awesome, 20%. That's great. 20% profit margin in the last quarter. But in the last year, they've done about 15% profit margin. So it's still a check mark there with a 2% dividend. So their 2% dividend is about $625 million per year. So we have to make sure they can support that dividend of 625. So far we have a check for profit margin and an X for PE.
Let's go to revenue growth over the past 5 years.
I
Paul.
imagine it's going to be very low, and I'm right. 7.4 billion to 8 billion. In 5 years, well, actually 4 full years, they've only grown by $600 million in revenue, but that seems to make sense because it's probably a pretty mature business.
Mature. Okay.
Mature.
How about profit growth over the same time?
Look at this one. 513 million to 1.15 billion.
That's pretty good, Paul.
Yeah, but the one thing I'm going to look at right here, guys, operating income. So look at this operating income right here. Whenever I see a big jump in profit with low revenue growth, I want to see what's causing that. So when you look at operating income, that's going to explain to you how the business itself is doing. And I look at this saying, okay, they've gone from 1.4 billion in operating profit to 1.7. So it's not a ton. So it looks like a lot of their profit might have been from other things. But either way, we're going to keep moving on from that one.
How about pillar number 5 is shares outstanding? We want this going down, Paul.
Check mark. Consistently 219 million down to 209. So consistently about 2 million shares a year.
Pillar number 6 is current assets greater than current liabilities.
I bet you this is going to be very good.
Okay.
3.2 billion in current assets versus 2.2 billion in current liabilities. So check mark there.
Very good. So everything is looking gleaming besides their little high of a PE ratio of 26. So
Correct.
A free cash flow growth is pillar number 7. We're going to look at the free cash flow and get the average.
And guys, another company with a low percentage of capital expenditures to cash from operations. I love that. That means they don't have to spend a lot of money to maintain their business growth, their business sustainability. That's awesome. So we went from 900 million to 1.45 billion. So 1450.
Wow, that's really good growth.
That's a check mark there.
Nice.
And now for the average over the last 5 years, Uncle Seth, do 730, 900, and 1.275.
Okay, the average free cash flow over the past 5 years
It's a
is
billion
1050.
50.
1050.
Okay, so they're selling for about 30 times free cash flow. And that's a lot. Now, their dividend was 625 million, right?
Yeah.
So let's see. Have they done any acquisitions? Oh, they've actually done a few acquisitions too. So their revenue growth doesn't even look that good. Ooh. Now here's the issue with multiple free cash flow. They've done acquisitions and still barely grown. Do you follow what I'm saying? So in order for them to grow, they have to spend money to grow from acquisitions. I don't like that very much.
So you're usually,
But it's a good brand.
If I'm playing our viewer,
Mm-hmm.
we find the free cash flow, then we multiply by that magic
Number, whatever that number is.
And for slow growing companies like this one, we want that number a
Lower.
little lower.
But
Right now it's at 30 because their free cash flow is $1 billion. They're at 30 billion market cap.
yeah,
So
now
it's a
granted,
little
30 of
high.
the last 5-year average.
Okay.
Their free cash flow. This is a hard one because their brand is so good. Like, how would you feel? How would you feel if I told you right now, hey, Hershey's gonna be out of business in 5 or 10 years?
You know, I think they're even. Yeah, no, it's not. Well,
You'd be flabbergasted.
yes, but
I
in
think
this
this
day
is a
and
good
age,
brand that's very sustainable.
I
right?
think they're reinventing themselves too. Like if you they do stuff. They integrate with ice cream flavors. Have you had the Reese cups that have the Reese Pieces inside? They're doing new things, and the kids fall in love with this
And my
stuff.
comment's going to be, then why isn't it showing up in their revenue numbers? I mean, their revenue isn't up a ton in the last 5 years, right? That's the hard part. So what do I want to pay for this company, Uncle Seth?
Well, that's what we're here for you to tell us.
I don't know. I'm going to sit there and say 15 times free cash flow. I think it's going to fall in half. I think the company's going to fall in half in price. And you might sit there and say, what the heck, Paul? How's that possible? It's not going to happen. Remember, guys, tons of companies, you think they're not going to fall in price, and they eventually do, because eventually they're going to realize that you have to make, and guess what? I put this in my trusty calculator, and it says it's worth about half of what it's at right now. It needs to be about, oh, no, not even.
Let me show it.
No, not even.
Okay, here you go.
No, I can't. Don't share it. I'm not going to share it.
Okay, go ahead.
Yeah, it's worth about half of what it's at right now. So I look at that saying, guys, like, be patient on Hershey. Good brand, good company, wait for the good brand to be at a good price, and then you can buy it for about $75 a share. That's probably what it's worth to me, about $75 a share. Is that a little low because the PE would be about 14, 13 and a half? Yeah, probably, but at the same point, it kind of makes sense to me.
Questions out there, guys. I hear what you're all saying. I see it there. Benjamin has a phenomenal question.
Let's see it, Benjamin.
Would you say that the strength of the first 7 pillars help determine the multiple for price to free cash flow, which
That's
is
a
our
great
pillar
question.
number 8?
I've actually never even thought of that. That's probably a great question. I'd probably do that in my own head. The more financially healthy a company is, the more you can pay for it. It's just like the U.S. government. Before 2010, the U.S. government is the most. The U.S. economy is the strongest in the world. That's why you get very little to invest in money from the U.S. government if you buy their bonds. The more safe and secure a company is, the premium it should get. The faster growing the premium, the less secure, the less you should pay for it. So that is probably a good idea. I still think 15 sounds about right to me for Hershey's. 20 seems a little bit of a stretch. It's currently selling for about 20 times free cash flow. But me personally, I don't think I want it for 20 times free cash flow.
Let's see.
The most recent year.
Oh, thank
20
you.
times. I'm sorry. When you looked at that, I was like, yeah, that's why.
Laren, welcome in. He says, this is great. Do you look at historical dividend growth rates? Does that factor in your opinion on stocks? I assume it would, Paul.
Yeah, I don't really look at it that much. I just want to make sure they can sustain this dividend. But it is something to look at to say, hey, have they consistently paid their dividend? Because if you rely on the dividend to get a return, you want to make sure that dividend is going to be there. And if they, yes, correct. And by the way, it's 130.
I'm sorry?
It's 130.
It's currently, well, why don't you pull up the graphic you want to pull up, and I'll preface this. And they said, Giroy, I don't know how I'm saying that right, Giroy, let Seth do a company and see what it does. We can try that at some point, but it's far more interesting when Paul does it, but I do love you. I love you nonetheless. I love you. Okay, Paul. Here's what we're doing, folks. We certainly realize that YouTubers do giveaways to attract attention to themselves. We have stayed off the train currently of sending our followers to invest in things like Webull and Robinhood. Paul just is not on board with trying to get acquisition, sort of get a commission from that way. How would I say this? If you watch all of our other videos, in comparison to other YouTubers, we have one of the most ridiculous setups in the world with 3 or 4 cinema cameras, a smart board,
a mansion in Mexico.
A mansion in Mexico. I mean, we have to pay for this show, and it costs a lot, Paul. I mean, hundreds and hundreds of thousands of dollars to see not so much this view with one camera and the 2 of us sitting together, but in general. And then to take the show on the road is always quite difficult, as you saw with some audio issues. But regardless, I'm trailing, Paul. The point of all this is we started Patreon to get more exclusive access to Paul and myself on a deeper base, to get into a like-minded group of throwing your investing ideas with some other people who think the same way as you. And it's just completely taken off. What, Paul? Yeah.
Doing Mo's
you're
face.
smashing Trader Mo's head. The Patreon is completely taking off. It's incredible. And if you jump on the train now, we're going places. So Paul came up with a doozy that wanted to reward the patrons.
So I want to show you how big this is. Everybody knows Mr. Beast. He has like 40 million subscribers.
Yeah.
He wants gave away a million pennies, which is $10,000, when he hit 1 million subscribers, right?
Yes.
Guys, we have 10,000 subscribers, not even. Could you please share what I'm giving away?
This is what we're giving away, folks.
I'm not giving away one of these. I'm giving away 2 of these, guys. So here's what's going to happen. Every patron out there, everybody who is a paying patron will get entered. For every dollar you spend this year during this giveaway, you get 1 entry into winning one of these 2 cars. The first one will be given away, well, at 100,000 subscribers and at the end of the year, we will be giving away one of these cars to a paying patron, okay?
These are Tesla Model 3s. You will pick out the color. You will pick out the interior.
And it's basically a $38,000 car that you're going to get. We're giving away 2 Teslas. The big thing will be you have to be a Patreon. You can never cancel it. So you have to be a Patreon through both entries.
Yep.
And you will get entry into this. Now, here's the best part.
Go on.
Everybody who's a current Patreon gets a multiplier of some number. I'm going to come up with it. February 1st, this will officially launch. So get in now. It doesn't matter what Patreon you're in. You get a multiplier. So let's say, for example, I choose a multiplier of 15. If you're in the $8 level, you get 120 entries per month. If you're at the $100 level, you get 150 entries you get 1,500 entries per month. Every month that goes by, the multiplier will go down for new Patreons. I want to reward people who enter early, who join our Patreon early. I'm trying to get to 100,000 subscribers. We're going to make a video about this. I want to get to 100,000 subscribers. We're going to give away 2 Teslas. Guys, nobody does this. Everybody out there, this is proof to show. Most people are trying to make money off of everything. I'm sitting here trying to say, I'm not going to make money this year on Patreon.
That's right.
If this happens, because this is going to be very expensive.
Yeah, Paul, when you came to this, it sounds pretty unbelievable giving away 2 Tesla Model 3s. Yes, you can be in another country. If your country has a Tesla dealership, we will get the car to you.
Or you can take the cash. $38,000 is the cash for the car.
This is an ultimate, this is just, it sounds kind of silly, Paul, because what's the catch? I guess if someone was viewing out there, what is the catch? Because there's always a catch, and for this
And
one...
by the way, as a Patreon member, you still get the website for free and the app for free while you're a Patreon. So you're getting entry into a car, and you're getting entry, you get the free website to go do your own analysis for a measly $8. And don't forget, once the website's out, the $8 Patreon will no longer be available. Whoever's in it will still be able to get it. We'll still have it, but that level will go to $15 immediately as our lowest Patreon level.
Yeah, so folks, yeah, D, I see you there. Yes, I got the giveaway now. We did a Patreon-only live stream last night where we announced this giveaway, and now we're all on board. So we are rewarding you as a patron for getting on this train with us. Some of you have been doing this since the first day, and we appreciate it. So if you've been paying into Patreon and getting that amazing Discord chat, you have far more votes than someone joining today, and many, many more votes than someone joining right before the cars are given away. So stay tuned, guys. How would I say this, Paul? This is not BS, folks. Paul has done ridiculous giveaways in the past.
This is the most ridiculous one.
You have sent people to Super Bowl tickets, which cost you way too much money, for one of your business's dynasty owner, which is a fantasy football. The winner of the league gets a completely absurd diamond ring that is
championship Super Bowl ring.
Yeah, it's completely absurd. So it is not past this guy to put your money where your mouth is, really, Paul.
Yep.
And so in comparison to some other people who have done giveaways, this is completely absurd. Like I said, Mr. Beast gave away 10 grand at $1 million. We're giving away 100 grand at
76,000.
76,000 at 100,000 subscribers. So,
by the way, it could be the first one could go at the end of the year. If we don't have 100,000 subscribers, I'm still giving away one car. Let's say we're only at 50,000 subscribers. I'm still giving away a car.
Okay, I see, Paul. Great. Well, all right, yes. Let's give away the Mexican mansion. Oh, that's true, Paul.
As in, like, give it away? As in somebody owns it?
Good idea, Droy. Great idea, but
actually, that isn't a bad idea.
We'll get back to you on this one. What are you saying?
Giving away the house.
Not this house, but we buy them a house here in the neighborhood and we manage it for them. Yeah.
Who said that? Giroy said, let's give away a Mexican mansion. That's not beyond Paul's thought process, is it?
No, it's not.
You were bonkers, bro.
Yeah. What?
Let me assure you, folks, these Teslas are not coming out of my paycheck for doing this. But Paul Like I said, you're crazy about this.
Listen, I just like getting attention for things. I know that this channel provide a lot of value to people, and I want to reward the people, the Patreon. Like at first we were going to do a subscriber giveaway, and then I'm like, no, because bots
we
can
don't
be
want
done.
yes, we don't want to. Yeah, we don't want some
plus-
random person in middle nowhere to get one of our cars. We want the people to support us.
We want Patreon. We want a Patreon forever, so we want to sit there and make sure that it's rewarding. And by the way, guys, I'm doing it now. Imagine what I'm going to do when we have 5 million subscribers and 50,000 patrons. I'm probably going to give away a Ferrari or something like that.
Yeah, you are saying Ferrari, right? I mean, you'll be doing Ferrari giveaways and Lambos.
Oh, I mean, if we have 50,000 patrons, of course.
Yeah, I see. Incredible. Wow. Okay, guys. So that's it. Yes, John, you can have this small villa one day for sure. Dom is freaking out. Yes, this is it, guys. Richard said this is generous. Paul, I would say this is absurdly.
Well, it's not generous. I mean, it's generous if I'm not getting something out of it, and I'm just doing. I'm getting something out of it. I'm trying to get the Patreon to grow, and I want to make sure that it's. Yeah, I want the Patreon to grow. That's the big thing. So we're gonna make a video for it. We're gonna do this all out. I just want to sit there and say, this is all part of the whole. Like, we're trying to build something more than just a regular channel. We're trying to build like a media business here, where we create other content. I have that show idea that I want to do. That'd be on YouTube, etc. So it's not just. Plus, we love doing this.
Yeah, people are saying? What if my son Gio Kirchner wins the car?
No. So first off, Mason cannot win the car. None of my buddies can win the car. Unfortunately, Gio cannot win the car. Seth cannot win the car. Nobody who's personally affiliated with me before the plus they're not even patrons anyhow.
No, I should support our channel though.
No, you should not.
Go on.
So, anyways, that's the way. So that's the way it works, guys. This is gonna be awesome.
Okay, guys, let's get. Mason's very upset with that, Paul.
Too bad, Mason.
Okay, guys. So that's it. Tell your friends. I think of course, the irony is, Paul, that we are enormously against Tesla at its current price.
But that's why I picked the Tesla. I want everybody to see I like the car. I don't like the stock. That's why I picked Tesla.
Yeah, and I have a Tesla as well. So I'll be able to help you. In your first drive, we'll do it together. So
remember, Christopher, all levels are eligible. It doesn't matter what level you're in, you're eligible. The more you spend, the more entries you get. That's the whole point of it. I'm rewarding those who spent more. But again, if you just want to get in, and you're going to get entry into the Tesla, as well as the website when it comes out, you can have free access. This is a win-win for everybody.
Yeah, for sure, guys. Okay, this is great. All levels are eligible. That's right, guys. All right, Paul. Shall we get back to what we do best?
What do we do best?
You have been lounging in a Mexican mansion for 2 weeks. I can't even get you off the couch to play tennis.
That's true.
Going for a walk has been like pretty much the activity we've done.
I love the walks, though.
Walks are nice, but
right.
Yeah, folks, this is what's going on.
What's the next topic?
The next one is General Mills, guy. What's Owen's asking about the draw method? Owen, we're basically going to give out all the votes. Let's see. So, for example, if you're in the top tier and you're paying $100 a month to talk to Paul on a daily basis, you get 1,200 votes this year. If you're in the Patreon for a whole year.
1,200 votes of the year plus the multiplier.
Plus the multiplier. So the longer you're in, if you join now, you're going to get your 100 for the patron, and then plus a multiplier for being in early and being in longer.
You have to stay in the patron the entire time, though. If anybody leaves for 1 month and comes back, you're automatically out.
Yep, that's right. So
that's it.
That's right, guys. Okay.
So General Mills.
General Mills, Paul. Let's get back. I'm so excited. I forgot my air horn, Paul. I forgot to put that air horn. Okay, guys, I'm back. I got my sound effects back.
Oh, wait, I gotta stop the share and then go share the other screen again.
Okay, hold on a second, guys. We love you.
This is exciting, though, isn't it, Seth?
So is the multiplier different for different levels? I wouldn't.
Multiplier is the same. Dollar amounts are different.
Yeah, the dollar amount. That's how you're getting the thing.
Right. Phoenix is asking, is the multiplier the same for different levels? The multiplier is the same, but the dollar amounts that you'll be multiplying is, of course, different.
Of course.
All right, Paul, let's see here. I got you. This is General Mills. Remind everyone what this company does.
So General Mills, they make a lot of cereal. I know that. Leading global packaged food company that produces snacks, cereal, convenient meals, yogurt, dough, baking mixes, ingredients, pet food, and super premium ice cream. Ooh, Nature Valley. I love Nature Valley. Yoplait, Haagen-Dazs.
Come on.
Yeah, I love them. All right. Market cap, $35 billion. First PE, 15.
Hold on a second. This is ridiculous.
What are you doing?
I got to get this dang ticker in.
GIS.
GIS, guys. What is the market cap again, Paul? Tell me.
$35 billion.
$35 billion, and the PE is 15.
So check
That's
mark there.
Really good.
Profit margin,
Hello.
also 14.6%, also a check mark.
Wow, we want that above 10, and that's what we got, Paul. Are you surprised by a cereal brand, or
Yeah, I mean, it's going to be a pretty boring company, so I imagine that would be the case.
they are making bank on? They do Lucky Charms, right? I mean, that's the best. Come on, it's not even an issue. So, Paul, look at that dividend.
Yeah, I'm like, so 3.5%.
Yeah, 3.5% dividend.
So they pay about 1.25 billion in dividends.
1.25 bill. That means, folks, when we look at pillar number 7, the free cash flow, they need to have enough to pay you that dividend. That is not set in stone. Be wary of that.
But so far we have 2 check marks, which is great.
Pillar number 3 is revenue growth over the past 5 years, Paul.
And as I expected, not a lot of revenue growth, 16.5 to 17.6. And there was a dip for a couple years, so I want to see why it went back up.
But it is a check.
It is a check mark. And profit, 1.7 billion to 2.2 billion. So check mark again.
So right off the bat, folks, if you're new to this, as soon as we see I'm catching on now. I'm you, and I'm catching on just as you are. As soon as we see this slow growth, our pillar number 8 multiplier is going to be a lower number, Paul, because this puppy's not going to the moon like Tesla and NIO. I know you hold a lot of Tesla and NIO. Let's go to pillar number 5, which is shares outstanding, Paul.
So this one is an X, and it's only in the last 5 years. It went from 600 million to 608 million. Not a ton, a little over 1%. It's still an X though. It started to dip, and then it's jumped up in the last couple years. So we have an X there. Balance sheet. What's the question? What's the comment?
I mean, these people are so funny. D, one of our patrons, said Seth still doesn't get the giveaway. You're probably right, D. I love you.
Last night, Seth's like, it's going to be this. I'm like, no, Seth, that's not the giveaway.
But
You're
the
like,
good part is I'm in charge of explaining it. So just killer content you're getting from us here. At
listen,
Everything
this
Money.
was all put together in the last couple days, and we haven't
That's
made the
true.
video yet. Once we make the video, we want you guys to share it, everything like that, etc.
Folks, we are in Manzanillo, Mexico. What you can't see, and we'll spin the camera around before we leave, Paul. But we're looking at the Pacific Ocean. I swear, Paul, we saw dolphins this morning in Wales this week. It's just been incredible. And yeah, I'll turn the camera around at the end of this. Okay, Paul, let's get back to it. We just did. Their shares are
An X.
An X. They are increasing, which is not good. Let's do pillar number 6 is current assets greater than current liabilities.
6.4 billion in current assets. Ooh, 8.5 billion in current liabilities. That is no bueno.
Why do you think they're underwater?
I don't know, but it looks like it's consistently less than the current liabilities. So take that for what you want. Maybe it's part of the business.
Oh, wow. Listen to this. David said they literally admitted to social engineering and brainwashing in their ads. I mean, that is true. They make...
Isn't advertising social engineering and brainwashing anyhow?
Yeah. I mean, I guess some people
Look at you. You bought a Tesla.
Some people look down on it. Some people look down on it when it's obviously attacking the kids, which they attack my kids and get them anyway. So let's keep going. Pillar number 7 is free cash flow growth, Paul.
All right, free cash flow again. That can be used for paying dividends, buying back shares, making other acquisitions. A lower multiple. I like this. Still less than 30%. So we have about 2 billion to 3.3 billion. 3.2 billion. Sorry.
Mm-hmm. That's a check then.
Okay, that's a check. And then the other years are 1.75, 2.22, and 2.27.
Okay. The average of those 5 numbers is
2.3.
2.3.
Okay.
The free cash flow average is 2.3 for General Mills per year.
I kind of like this, I think.
Come on.
Yeah.
So let's say it's 15 times free cash flow. What does that make it worth?
Well, this number 2.3 billion times 15 is 34 billion for the market cap.
And the company is currently at
35
billion. And 2.2, and what's the dividends? 1.25?
3.5%.
1.25 billion. So they can afford that.
They can afford their dividend.
Guys, I kind of like this. I'm going to go to their cash flow statement and see what acquisitions they've made, because I'm sure they've made some. Oh, a big one right here. Oh boy, that's a big one. Okay, but that's okay. The revenue's still up in those years. Income statement. All right, they're still growing the revenue. Yeah, I think this is probably worth what it's worth today. It's probably a $55 to $60 company, maybe $50, but I don't think it's terrible here. It's I obviously figure out what that acquisition was. If somebody can find out what General Mills bought in 2018 or so, and what they spent $8 billion to buy, but it doesn't seem terrible. Doesn't seem bad. And I actually think like this is one of those companies that's going to be a good blue chip company. It's going to pay a solid dividend as it falls. Dollar cost average into this. And I mean, guys, look in 2018, it was at $38 a share. Now it's at 58. All-time high was 73 in July of 2016, and exactly 1 month after the Cavs won the NBA championship, July 19th.
It's good stuff, brother.
Yeah. So I kind of like this, guys. This is pretty solid.
If you just joined us, we've looked at Conagra, Shake Shack, Hershey, and just now General Mills. We will do Kellogg's next, but your final take on General Mills, Paul, maybe I didn't hear it. You kind of like it.
I kind of like it. I like it as it's probably selling for what it's worth, in my opinion. Is it a discount? No. But maybe Mo and I can do some GIS puts along the way.
Ray, I don't know if Tesla offers their cars in this pink color shirt, but you
is
can
this
definitely
pink or is this fuchsia?
you can definitely get that customized for sure. And Victor said they bought Blue Buffalo pet products. That's what he's looking up. Maybe that's true. Oh, look at this. Here we go. Yeah, Ray's saying they completed a transaction with Blue Buffalo. That's interesting. I think I buy my dog food from them.
Blue Buffalo was an $8 billion acquisition.
$40 all cash transaction. Look at that. Wow, interesting. Yep, that's true. Benjamin Rourke, our co-host, said that. Yep. Okay, well, that's interesting.
You buy Blue Buffalo? I've never even heard of Blue Buffalo, and I have 4 dogs.
I think you might know of it. I think you might know of it. If you walk down the dog, well, you don't go shopping, but when normal people walk down the dog food aisle, they see Blue Buffalo. I think that's true. So, okay, guys. Make sure. Listen, 123 watching. We love you. 66 thumbs up.
Yeah. Doesn't sound like people want a Tesla so bad, does it?
Yeah.
You like that?
You know, you give a rat some cheese and he'll ask for wine, Paul. Really? Yeah.
I don't know what that means.
The Tesla giveaway. Make sure you guys are destroying, smashing, and tickling that thumbs up. Oh, there they go, Paul. Just a couple, just to get your goose gandered. All right, let's do the next stock. Paul, is Kellogg's. Are you looking it up?
I'm not looking it up yet. I
Great.
want to see how our Patreon has been doing the last. Well, we gained a few.
How nice.
All right, so what is it? Kellogg's.
Kellogg.
Sick.
My pen completely just exploded. Okay.
I didn't know Kellogg was in Michigan. Is that Battle Creek? It's probably in Battle
Here
Creek.
we go. Kellogg. The ticker symbol is K. Tell me about the company, Paul. What are
All
they
right,
doing?
they're based in Michigan. Fruit Loops, Frosted Flakes, Special K, Pop-Tarts, Eggo, Kashi, and Morningstar Farms. Oh, they added Pringles to their brand in 2012. I'm not a huge fan of Pringles. You like Pringles? What the hell?
My
are you
kids.
doing?
I lost my pen.
It's
Paul,
probably
too.
underneath the base of the table.
My kids worship Pringles, but they're not even really potatoes or something. There's some
I
sort
don't
of
even like
cardboard.
Pringles.
But all right, let's hold on a second, Paul. Keep
All
going.
right, $21 billion market cap, guys. PE 17.7. So check mark there. Profit margin barely where we want it to be. 10.15 last quarter, but if you look in the last year, it's actually less than 10%. But we're still going to give it a check. So 2 checks so far. 3.7% dividend on $21 billion is $750 million dividend. $750 million. So remember, we want to look at the free cash flow to determine if they can support it.
Pillar number 3 is revenue growth over the past 5 years.
Barely revenue growth, 13.52 to 13.58. Oy vey.
Going
barely
up just
revenue
a
growth.
smidge. So
Yep.
a low multiple when we come down to pillar 8. But just a check still, nonetheless. Profit growth.
600 million to 960 million. So a check mark there, but if you look here, guys, it peaked at 1.33 and fell. So it's not very consistent net income.
This is 4 checks so far. Let's look at pillar number 5, which is shares outstanding. We want this number of shares going down.
354 down to 341. Check mark there.
Hey. 6. Okay. Pillar number 6
Hey.
is current assets greater than current liabilities.
4.75 billion in current assets versus $6 billion in current liabilities. So again, an X there. It seems I thought this was gonna be an issue with the food companies, but we'll see. Free cash flow. What are you laughing about, Peanut?
Oh, it's just ours. This is a funny comment. I'll get to it in a second here. Let's do free cash flow growth, which is pillar number 7, guys.
1.15 billion down to, oh boy, 600 million.
1.15 billion.
Down to 600 million.
Down to
So
600
that's an
million.
X.
That's an X.
And if you remember, their dividend is 750 million. So in 2012, they technically couldn't even afford that dividend. Okay, the other years,
Okay, go on.
770 million minus 100 million,
Minus 100 million.
and then 1 billion.
Okay.
And this is an inconsistent company, guys.
Wow, the free cash flow average over the past 5
It's
years.
$700 million, 684.
684.
They came in. So in the last 5 years, if they've been paying $750 million in dividends, they haven't even afforded that. They got to change their dividend. Let's see how they've done in the last 12 months for free cash flow. Last 12 months free cash. Oh, it's been pretty good. 1.4 billion in free cash flow the last 12 months. That's good. This one's kind of scary. Let's see what their profit's been the last 12 months. 1.2 billion. Okay. Operating income annually. Operating income has been. Did they make any acquisitions? Let's look at their acquisitions.
We're looking at Kellogg's
They
cereal
sold a
brand right
division.
now.
Look at that. They sold something in 2019. Kind of like that. Okay, so they sold something. They still had revenue growth in the last 12 months. 13.58. Did they? Yeah, that's interesting. So they sold something, guys. Let's see. This is another one where the Kellogg. How do you value this? I mean, look at this peak price of $87 in 2016, July again, down to 54, down to 56, 61 now. 15 times. What was the average free cash flow? Multiply that by 15.
Average free cash flow was 684 million times 15 is 10 billion.
So it has to fall in half according to this. But this is a weird one because they've sold the division off. They sold something big and generated, big money in cash flow, in free cash flow, in cash in hand. They have a good dividend. Make sure you feel like this company is on the up and up because the last 12 months have been very good. They generated 1.4 billion in free cash flow on $600 million, with paying $750 million in dividends, so it can support it. But the issue I have is the history has been inconsistent. That's the problem I've had.
Yeah, or I was asking, do you guys obviously look at the 10Ks? No, we don't just look at the 8 pillars. The 8 pillars is the 500-foot view of like, is this company worth looking into? And does Paul do this for most of his companies that he invests in? Yes. In fact, you only have a portfolio of 20 to 30 stocks, right?
Not right now. Right now I have like 7 stocks.
I have 30 myself. So again, we're only looking for 30 bangers, not thousands, not through thousands, and definitely not putting our income on hype stocks. We really want to
the 8 pillars are used to kind of get you a 500-foot view of where the company is, what it's doing, and what you want to look at next. It tells a story of saying, okay, like I just said here, their revenue growth was inconsistent, their profit growth was inconsistent, their free cash flow was inconsistent. Let's go figure out let's tell a story that explains why that is. I don't know why that is, but we don't like, it's just like a relationship. You don't want a spouse who's inconsistent with their mood all the time. So don't get married, am I right?
Jay Lee's asking for the next one. You want to get going?
Let's get rolling.
We have got this a lot, folks, and now's the time. Beyond Meat, Paul. Beyond Meat. I don't know why people love this, but it's banging, and I just got it in Mexican pesos, Paul. So here we go.
Okay, what's the ticker symbol for Beyond Meat?
BYND. This is off our Patreon request line. This is from Jay Lee.
This is going to be Beyond Nosebleed.
What do you mean? Beyond Meat? What do you mean?
Okay.
What's the ticker again?
Ticker is BYND. PIMP.
Go ahead, Paul.
All right, guys.
We're doing Beyond Meat. What is the market cap for Beyond Meat?
$7.5 billion on $400 million in revenue. Sick.
Wait a minute. Wow, okay. That's not a lot.
Sick.
Okay, $400 million revenue. Okay, let's look at their PE ratio, Paul. What is that?
Negative 0x.
Okay, no profit. That's good.
Profit margin obviously is an X as well because it doesn't make money.
Do you have to look at this anymore?
I want to show people how stupid this is.
Okay, revenue growth over the past couple years.
Now, the revenue
Paul.
growth is huge, guys.
Okay, this is a growth company stock,
This is
Paul.
a growth
You're totally
company.
wrong.
19 million to 324 million.
Wow. What did you say? 19 to 324?
Yeah.
Okay, so how about profit growth? So that's
Okay, this is a check mark for profit growth as well. They lost 25 million. Now they've only lost 12.5 million. So nice job, guys.
Say that again.
They went from losing 25 million to losing 12 million.
Now, don't people say that when companies are growing, they have to spend money, or they're just not making money?
Sure. I'm sure it is. That's a big part of it, but that's the whole thing. This company needs a lot more analysis to understand what their growth is going to be, because their gross margin was only like 26%. That's not as much as I would have thought it would be.
Let's look at shares outstanding, pillar number 5.
Check mark, 46.4 down to 42.3.
Are you surprised they're not selling shares?
Yes, I am surprised.
Pillar number 6 is current assets greater than current liabilities.
391 million. Great news, guys. Versus 45 million, and they only have 107 million in total liabilities. So
Wow.
this is the monster of all checks. But the company's so expensive, it's not really going to make a difference that much in the fact that their cash can pay off all of their liabilities. So
Free cash flow growth is pillar number 7.
let's see what their free cash flow looks like. They went from losing 28 million in free cash flow to losing 72 million in free cash flow. So X there, and they don't make cash flow. X. Guys, I'm just going to avoid. This is way too expensive a company for $7.5 billion. But based on Darnell's investing lately, he might want to buy some Beyond Meat because he bought Neo and Tesla this morning like a moron.
This is Rahman. Go to fitactivesports.com to get your weightlifting gloves and gear. Fit Active Sports out of Georgia.
And if you live in Northeast Ohio, you need a tree taken down, call NFL Landscaping and blah, 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 blah.
There's Darnell, former Cleveland Brown. Congratulations to the Browns making the playoffs. Former Cleveland Brown.
Darnell was on the last team that made the Browns before this year. Made
Yep.
the playoffs before this year.
That's right. Paul, so it's a no-go on Beyond Meat. Just don't
Yeah,
even get
it's-
anywhere near that. The financials are absurd.
Yeah.
So why do so many people love it, Paul? Is there some sort of hype behind this?
Well, because look at the stock. It's gone from, it's bipolar. It's went from 66 to 235, down to 58, 57, 54, back up to 200, down to 120. All in 2 years.
It's bipolar.
It's all crazy.
That's the most dangerous bear, Paul. A bipolar bear, you know. Okay, guys. It's going on 2:00 Eastern. It's we thank you. Click the description below to join our Patreon. You may be getting a Tesla Model 3 with Paul and I. If you're in the States, you have to come to Ohio and we'll go get the dang thing ourselves. We'll pick it out, make a whole show about it. And Paul, your final words on the world ahead of us. Great point. I love that. Yep.
The world ahead of us. Who the hell cares what I have to say about the world ahead of us?
It's unlike other shows that are incredibly scripted. We just, this is right off the cuff. So.
Yeah, and guys, the Patreon thing is a big deal. Please go sign up for the $8 Patreon. You're going to get so much value from it, and you'll be entered in to win a Tesla. This is a great giveaway. The website is currently, I just talked to my developer last night on Slack. It's going great. You guys are going to be able to do a lot of this stuff without my help, but you'll still be able to come to live streams and have a good time. And please subscribe to Trader Moe's the YouTube channel. We want to get to 100 so we can lock down that name and all that stuff.
All right, guys. Thanks for joining us. You're the best. And we'll see you next Tuesday at 1. Tuesdays and Thursdays are live stream. We'll see you patrons on the Patreon as we talk to you every day. We love you. And thanks, Paul. See you guys.
Thanks, sir.
See you around.